In 2025, Facebook and Instagram users worldwide reported sudden account deactivations with no prior notice. According to a BBC investigation published on July 3, 2025, Meta acknowledged a technical error affecting Facebook groups, but users stated the issue extended to personal and business accounts. More than 25,000 people signed a petition describing lost access to family photos, business pages, and community groups. Meta's appeal system often requires users to log in to submit a request, which is impossible if the account is disabled. On October 16, 2025, a user on Reddit documented that their permanently disabled Facebook account was restored within 48 hours after subscribing to Meta Verified, a paid service costing approximately $15.20 per month per platform. The user gained access to live chat support, submitted identity documents, and received no formal explanation upon restoration. Free users reported no access to similar support channels. This pattern of restricted recourse is not unique to social media. In the financial sector, automated systems frequently restrict access without human review. In the United Kingdom, the Financial Conduct Authority, FCA, issued guidance in 2023 warning banks against sole reliance on automated fraud detection, after multiple consumers reported account freezes based on routine transactions. One case reviewed by BBC News in 2024 involved a small business owner whose account was locked for 17 days after a legitimate international payment. The bank cited unusual activity, but provided no specific details. Access was restored only after media involvement. In Australia, the Robodebt scheme operated from 2016 to 2019. It used an automated data matching algorithm to recover alleged overpayments from welfare recipients. The system compared averaged annual income from tax records with fortnightly welfare payments, generating debt notices without verifying actual earnings. Over 470,000 people received incorrect debt notices. In 2020, the Australian government admitted the program was unlawful. A royal commission concluded in 2023 that the scheme caused widespread harm, including severe mental distress and at least 2 suicides. In insurance, automation is increasingly used to assess risk and process claims. The European Insurance and Occupational Pensions Authority, EIOPA, reported in 2024 that 68% of EU insurers use AI or automated tools in underwriting. In Germany, a 2023 case reviewed by Der Spiegel found that a health insurer denied coverage for a psychological therapy session because an algorithm misclassified the treatment code as not medically necessary. The patient appealed 3 times. Only after contacting a consumer protection agency was the decision reversed. Government-issued digital IDs present another layer of systemic risk. India's Aadhaar system, launched in 2009, now covers over 1.3 billion residents. It uses biometric data, fingerprints, and iris scans to verify identity for services like banking, pensions, and food distribution. A 2022 study by the Center for Internet and Society in Bangalore found that 9% of rural residents experienced denial of rations due to biometric authentication failures. Elderly users and manual laborers with worn fingerprints were disproportionately affected. The Supreme Court of India ruled in 2018 that Aadhaar cannot be mandatory for basic services, but enforcement remains inconsistent. In the Netherlands, the Toeslagen affair, childcare benefits scandal, began in 2013. The Tax and Customs Administration used an algorithm to flag families for fraud based on nationality, name spelling, and dual nationality. Over 26,000 families, many from immigrant backgrounds, were wrongly accused of fraud. Some were forced to repay up to 60,000 euros. In 2021, the Dutch government formally apologized. A parliamentary inquiry concluded the system violated the rule of law and human rights principles. No officials were criminally charged. In the United States, the Social Security Administration uses automated systems to verify identity during benefit claims. A 2023 Government Accountability Office, GAO, report found that users locked out due to identity verification failures had no direct phone line to resolve issues. Average wait time for written appeals exceeded 90 days. During that period, benefit payments stopped. In Estonia, often cited as a digital ID success story, citizens use a national EID for voting, banking, and healthcare. However, a 2024 report by the Estonian Data Protection Inspectorate noted that 12% of residents over age 70 required in-person assistance to use the system. Technical failures during peak usage, e.g., elections, have caused temporary national outages. Meta's support structure reflects this broader trend. As of 2025, only users who pay for Meta Verified receive access to live human support. Free users must rely on automated appeals. Meta's 2024 Community Standards Enforcement Report states that 99.7% of content actions are taken by AI before user reports. Yet the same report shows that human reviewers overturn 20–30% of AI decisions upon appeal, confirming a significant error rate. The European Union's Digital Services Act, fully enforced in 2024, requires large platforms to provide meaningful recourse against automated decisions. However, enforcement remains limited. The European Commission has not yet issued fines specifically for appeal process failures. These cases show a consistent pattern. Automated systems are deployed at scale. Errors occur regularly. Recourse is often slow, hidden, or available only to those who pay. Real-world consequences include financial loss, denial of care, and social exclusion. The common thread is not the technology itself, but the absence of guaranteed human review, transparent criteria, and timely correction mechanisms. This is not hypothetical. It is documented, it is ongoing, and it affects millions.